Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, Tucker with you here on a Thursday. Got to be honest, I was going through the stack this morning, and it's a pretty quiet week. Like there's just not much going on, if we're being honest. But the stack is dynamite today, so I'm pretty pumped up about what we got. So we did get producer price index data this morning. It was very muted, very calm, and puts another log on the fire for, hey, the Fed doesn't need to do anything in September, and so they're probably not going to do anything in September.
Where do the odds have it now? It was like 50-50 at last look, and is it now favoring do nothing?
As of this very moment in time, we are now at a 65% chance of no hike and a 35% chance of hike. So I don't think there's anything particularly important to say about this PPI report other than it's good news that you have one that's relatively muted. The catch on both this and CPI is this came during the month of July where gas prices were about 5 to 6% lower than they are today. And so some of the improvement is going to be given back when we get the August data.
Yeah, look, the heavy inflation for this year came in during the months of the heavy conflict in Iran. That dissipated in June and July.
Yep.
And I don't think anyone in their right mind would say that they are confident that we're not going to get back to those places where we were in April and May.
No.
So, yeah,
you can
take it with a grain of salt. Who knows where inflation's going to be 3 months from now.
There's a reasonable path by the end of the year for oil prices to be back down in the low 70s, high 60s. There's a reasonable path for them to be back at 120. So, like, and again, when I say reasonable, I'm saying, like, look, it's not a 50-50 thing, but you could probably look at both those prices and be like, yeah, there's at least like a 15% chance that either one of those happens. Mm-hmm. Maybe both of those happen before the end of the year. Wouldn't that be something?
While it does make sense for us and the Fed to, ignore to some degree what is happening in energy markets, right? We talk about that frequently, how, the Fed cares something more about core prices than they do food and energy because it's largely outside of their control. It's a bit of a different story when you are talking about the lack of availability of refined energy products. Again, not here in the United States, but globally, and what that can do to longer-term trend lines in prices and supply chains. Right? Like, it's one thing to say, oh, yeah, gas prices went up, we should look through that. It's another to say large manufacturing hubs in Vietnam can't get access to diesel to run their manufacturing facilities, and so we need to be cognizant of prices going higher because of that issue.
So we'll see how that all develops. Again, no unique insight on exactly what's going to happen in the Middle East over the next 3 to 4 months. We'll see how it goes, and
if you have unique insight, we'd love to hear it. But I don't get a sense that a lot of people have unique insight about what is happening right now. No. Or really any insight at all, because there's just about nothing coming out of there right now.
I have unique insights on some topics. Mm-hmm. Not ones that would be interesting to most people. But they still let me talk for 2 hours here.
Yeah.
Which is great.
I was trying to think about what unique insights I would guess about, but I don't need to do that right now.
You're all stuck with me for a couple hours, so it's great. Imagine spending 24 hours with me. It's Wonderful. Let's talk a little bit about the Fed specifically, digging in a little bit more on inflation and the Fed, because we got kind of two companion pieces here that I think get at the crux of the problem. You've got a piece from Nick Temeros in the Wall Street Journal. Inline inflation reading buys the Fed more time to defend its forecast. So basically saying, okay, because you've had, a couple muted readings in a row for inflation, the Fed could say, hey, we think more of these could be coming, and so we don't need to hike or cut. We can just stand pat. Got it.
Yeah, with the knowledge that there's going to be, let's see, when's the next meeting? It's going to be on September 16th. So we will get one more jobs report and inflation report before that meeting happens.
Sure. Then we get this piece from Bloomberg Opinion. The $20 burrito debate is a sign of inflation fatigue. So I got a couple bones to pick just in general on this.
Okay.
First, as someone who had a burrito last week,
an expert on the subject, if you will.
It's not my first one either. I've had a few over the course of my lifetime. What I can tell you is none of the burritos I've ordered are $20. And like, we're in a high cost of living area. This is Massachusetts. Like, we're not in Iowa, we're not in
Indiana.
Kansas, we're not in Wyoming.
Right.
This is Massachusetts, probably one of like the 3 or 4 highest cost of living areas in the country and one of the top 10 cost of living areas in the world.
Yes.
Here are my burrito costs over the last year, Michael.
Oh, God, you tracked him.
I did, because I wanted to actually, like...
I was wondering why you had your phone out this
I
early in the
have
program.
all of my transactions for burritos here. So I ate at Chipotle 3 times last year.
Yeah.
$15.41, $16.91, $14.55.
Well, that was 2025, Chuck.
I ate at Anna's Taqueria last week. And granted, I got 2 burritos because I ordered one for Ben also.
Okay.
$27.11 for 2, which means
two.
they were $13.50 for each burrito on average.
So where are you getting a $20 burrito?
I don't freaking know. And
JFK Airport?
And I got to tell you, like, I had guac on mine. I had sour cream. Like, I wasn't being skimpy about it. I was like, no, pork me up. Like, I want to, like, really get something out of this. And so...
I did not think we would have the phrase pork me up in the first 15 minutes of the show today.
That one?
You ever see the... Jerry Seinfeld... no, it's not Seinfeld. It's Ray Romano, actually. In his book, he talks about, on long car rides, the thing that he would do to entertain himself was he would try to come up with sentences that have never been said before in human history.
Yeah.
And, like, in doing so, he could come up with, like, the concept for, like, an episode of a show. Like, oh, like, give me back my fudge suitcase. And it would be like, okay, like, what's the context that someone would say that?
Right.
And, like, you develop, like, an episode on that. Yeah. In any case, burritos... First of all, I don't know where these $20 burritos are coming from.
Sure.
Because the ones I'm seeing are 25% cheaper than that in Massachusetts.
And rather filling, from what I understand.
Right, like, you're not, like, walking out of a Chipotle like, oh, I didn't get enough food. Like, no one's ever said that in their life.
Need a nap.
Right, exactly. It's like, I probably could have done with half of that, but I finished it.
Then a bathroom.
Easy.
But when we talk about this again, debate, whether it's this burrito debate or, remember the McDonald's one? Like, why is a McDonald's meal like $15 a couple of years ago?
Yeah.
People are fed up with the cost of living. Like, regardless of the specific number, they're fed up with it.
Yes.
And it gets at the core idea behind why people hate inflation. It's not because they're inherently worse off usually. It is because they're not better off. And specifically, you go back 15 years. Like when I was, first out of college, and a burrito from a Chipotle or an Anna's Taqueria was $8, $9, somewhere in that ballpark, right?
Yep.
But Michael, the people that were working at that Chipotle or at that Anna's Taqueria, what do you think they were making an hour?
30% less than
$8 or $9. They were probably making about that. What do you think they're making today?
Right.
Probably like $15, $16 an hour. And so the point that I'll make is the cost of these things has gone up as our wages have gone up, and it feels worse to us because we all remember 15 years ago when we were like, man, that burrito cost half as much as it does today. Yes, but on a wage perspective, you're probably making about twice as much as you were 15, 20 years ago. It's just that, like, it doesn't feel like it because it's getting eaten up in real terms by these higher prices.
What percentage of Americans own their home? 2/3?
About 60%, and about 60% of those still have mortgages. So, like, outright, probably about 20% of Americans own their homes with no mortgage.
So I'm just wondering psychologically if I'm just different. I know that I'm a little bit different, but in the way that I think about some of these things, because I buy burritos on occasion too. I go out to dinner every once in a while. I buy new cars every here and there. And I am also dissatisfied with the price of those things.
You wish it was higher?
No. I wish all those things were lower. I wish my property taxes were lower. But then I also think about my situation and say, well, you know what? When I think about all that and I look at, for instance, the value of my home that I've owned for the last 7 years, which I know is not everybody.
Sure.
I look at things and say, well, you know what? Compared to the wealth that I've built in some of these other areas, I'm not all that surprised that a burrito is closing in on $16, and I'm not all that frustrated with the fact that a car is more expensive than it was before. But I don't. Maybe the value of a home is such an opaque topic that people don't consider that it's not in front and center of them. But to me,
they don't look at it every day.
No, they don't. But I'll tell you, like, I get a stupid postcard in my mailbox every week asking if I want to sell my home, and I get an email from Redfin every once in a while saying your home has increased by this much this time. And yeah, I don't know. For me at least, and maybe it's because I'm much closer to these topics than the average person, I'm unhappy with the prices of all these things, but I also recognize that I've benefited pretty substantially from the inflation that we've seen.
It's tough to kind of look at this stuff and figure out, you know, where the real issue is.
Now, I'd be especially PO'd if I experienced all this inflation, you know, my wages just barely kept pace with it, and I didn't own assets during that period of time, and have seen my rent increase substantially, and now my ability to get a mortgage has, creeped up quite a bit. So I'm not saying that 40% plus of Americans should be completely satisfied with this economy, but there's 2/3 that have benefited quite a bit from the inflation that we're seeing at the moment.
But here's the problem is that burrito is never going to get cheaper.
In all likelihood, neither is your home.
No, like, this is the deal. Like you don't have deflation, and I know people are like, "Oh, I want deflation. I want prices to go down." Here's the deal. If you know that something's going to be cheaper a year from now as opposed to today, you will not buy it today, and so will everyone else, which means economic activity goes down, which means you end up with a deflationary spiral, which read up on like the post-Civil War to World War I period and why there was a recession every like 3 to 5 years, and it's basically because you would have these recurrent bouts of deflation where the economy would just go in the toilet. And it's not good when it happens. I'm not saying that you want, like, high inflation, but don't be looking at it like, oh, like, deflation would be great. Yeah, deflation is great if your income is maintained while the price of everything goes down. The problem is that every example of deflation that we have historically, that doesn't happen. Your income goes down while the prices go down.
Solid segment, guys. We referred to burritos, pork, and toilets twice. Let's take a break.
And we touched on the Civil War.
I mean, that was like well-rounded.
It's a little bit of something for everything. Something for everyone.
Yeah.
And we'll have more. We're going to be talking about... let's talk about tariff refunds when we return.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning right here on the Financial Exchange Radio Network. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register today and join more than 1,000 runners who have already registered for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. Registrations are on a record pace, so if you want to participate, head to dav5k.boston and sign up, or please consider making a donation. Your gifts help provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Piece in the Wall Street Journal, tariff refunds are here and are turbocharging earnings. During the second quarter earnings season, over 40 S&P 500 companies reported $9.6 billion in tariff refunds, including about $2 billion in cash already received. Customs and Border Protection had accepted $128.7 billion in refund applications for processing through July. Several of these companies have said that they plan to share or pass refunds onto customers where they can basically like prove what the tariff paid was. Most notably, think about FedEx just as an example. Yeah. On your FedEx shipping slip, it was a line item for, tariff for the item in the package. And so it's very easy for them to address that.
Yeah, they got about an $800 million tariff refund as part of this structure.
Yeah. On other companies, it's going to be a little bit harder for that to happen. So they may end up just keeping the tariff refunds even though you paid the higher price.
Because remember, there were a few companies that tried to line item this. Amazon notably,
did.
Right? They put it in there and then immediately walked it back because of the president calling them out and probably making a phone call to Jeff Bezos along the way. And so instead, we all have a sense that the stuff we bought on Amazon and at Costco and Walmart were affected by tariffs, but it wasn't clear to any of us on our receipts or anywhere else to what degree the TV I bought was affected by a tariff, or the bicycle, or this, that, or the other. And so how do you go about processing refunds? If you're Costco and you get that much of a refund, do you just say, okay, these customers spent the most amount in 2025, so we're going to pro rata do that? It gets complicated quickly.
A company like Nike, who has received like a few $100 million in refunds to this point, when you go and buy a Nike shoe, you can go to Nike.com and buy them. That's what Nike was trying to get people to do several years ago, but then they didn't abandon that, but they said, no, like, we got to go back to, like, retailers. And
pretty much nobody actually does it.
Right. It's like, okay, like, not a lot of people were doing that. So when you go to Amazon or Foot Locker or wherever you buy your Nike shoes, Nike hasn't sold to you. Nike sold to Amazon, and who knows how Amazon marked that up or down based on whatever the new price was from Nike.
Right.
Who knows how Foot Locker marked it up or down. So it's like there's multiple levels then between who paid the tariff and your eventual purchase. Well, again, I don't know exactly what we're going to end up seeing in terms of how many companies attempt to pass these refunds on to customers. Some, like FedEx, should be able to pretty easily. Others, like in Nike, it's kind of like, well, we don't know who bought our shoe, actually. Like
I'm not sure Nike's in a position to be refunding much of anything these days.
Maybe they could like give you shares in Nike.
They are.
That would be interesting.
They are on sale.
Yeah. Now 50% off.
Yeah. Almost exactly over the last 12 months, actually.
I know. It hasn't been a good run for them.
Yeah, nice.
Yeah.
So
we got a text that I want to touch on.
Okay.
This was in the discussion of our $20 burrito.
Indeed.
And I went through my burrito transactions for the last year and found none adding up to $20. The text reads...
The CBI, if you will, the Chuck Burrito Index.
Yes, it's a nice companion to the CPI.
Yep.
The text reads, burrito, $20 comes from the delivery charge, credit card charge, and tip for delivery. Well...
Don't do that.
That's a fundamentally different thing that we're talking about here. Like that's different. That's like
lunch cost me $3,000 because I flew to Spain for it.
Right, like well the bottled water was more expensive than the tap water. Well, yeah, because it's different, So those are apples and orangutans that we're talking about here. Let's take a quick break. When we return, we've got Wall Street Watch next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699, or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Navigating Retirement Housing Choices. Mike, as you get towards retirement, what are some of the considerations for whether you should stay in the property that you've been in for a while or consider moving to a new one?
To me, for most people, they come down to 2 factors. One would be financial, and 2 would be quality of life. And so, first things first, right? I mean, you're heading to retirement. Did you do enough saving to be able to afford to live in the same place you did, with or without that mortgage, with where property taxes and insurance costs have been going? So that's probably number one. But the one that people kind of start to forget about is the quality of life. And so how close am I to family? How close am I to health care? And am I going to be safe in this house 20 years from now from a healthcare perspective?
It seems like for most people, they're going to have different priorities as far as which of those come first. So it very much is not, here's what you do, but more, here are the things you need to consider and then get to your own conclusion.
Yeah, but I think it's important that people think long-term on this, right? You do not want to make this decision twice. And so very often we do see that happen. Hey, I'm moving here because of taxes, and I didn't think about the other qualitative lifestyle pieces about that move.
Folks, our guide is titled Navigating Retirement Housing Choices. There are 2 ways to request it. First, you can call 800-393-4001. Second, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets again moving higher as investors react to more inflation data, where the producer price index remained unchanged in July, better than estimates of a 0.2% increase in wholesale prices. Right now, the Dow is up over 1/3% or 200 points higher. S&P 500 up over 0.8% or 66 points higher. NASDAQ up over 1% or 281 points higher. Russell 2000 is up about 2/3%. 10-year Treasury yield is down 6 basis points. at 4.62%, and oil down 3% today, trading at $80 a barrel. Cisco reported a jump in net income in the previous quarter as the tech firm continued to receive billions in orders from AI hyperscalers. However, investors were disappointed by its AI sales guidance, sending the stock down by 7%. Meanwhile, in its second earnings report since its IPO, shares in Cerebras Systems are down by 9% after the chip designer and cloud computing provider projected slower growth than some investors anticipated. Elsewhere, ticket seller StubHub is seeing its stock plunge 13% after the company failed to turn a profit in the second quarter due to climbing costs, despite surging revenue from the World Cup. Tapestry posted underwhelming results for the previous quarter, sending shares in the parent of Kate Spade and Coach down by 15%. And after today's close, chip giant Applied Materials will report its second quarter earnings. I'm Tucker Silva, and that is Wall Street Watch.
Piece in the Bloomberg. It's titled "Mortgage Rates Are High, and Here's Why They Could Get Higher." Well, because they could go up, right?
Yeah. The current Federal Reserve is unsure about raising interest rates on the... Let's actually get into some of these technicals. So, last meeting for the Federal Reserve, Kevin Warsh announced that the Fed was not moving on interest rates. There were 3 voting members who decided that they wanted to, but they decided as a committee not to. Immediately after the words, long-term bond rates moved up in spite of the Fed saying we're not moving interest rates. So mechanics here are important. The Fed controls the overnight short-term rate by mechanically trying to target a range. They have zero control over those longer-term rates, and as a result of the Fed's lack of actions, and as well as some perceived concern that they may be unwilling or unable to get inflation under control, investors sold bonds, driving interest rates higher.
Subsequently, that has reversed. If you look at the 10-year Treasury right now, it's at 4.619%. It's basically exactly where it was before the Fed meeting. So, yeah, like, interest rates could move higher if conditions warrant. If they don't, then they won't. Like, I don't think... Again, this is another one where it's like the headline of the piece, kind of makes it... I know that, like, fear sells, and, like, oh, you got to be nervous about this. Like, I get that. Like,
sure.
But I just don't know. I mean, here's the thing. I struggle to find an environment going forward. Like, if we look at the next 2 years, I struggle to see an environment where mortgage rates are going to be consistently in the 5s. And I struggle not quite as much to see a case where mortgage rates could consistently be in the 7s.
Right.
Like, in order for mortgage rates to go into the 5s, you have to have one of two things. Either inflation has to get so under control that the long end of the yield curve no longer prices in any material risk of it anymore, or the U.S. economy goes into recession. In order for rates to go into the 7s, the U.S. economy needs to be cranking, and inflation has to be, high enough that it warrants higher rates than are currently in play.
And to just, put out the odds here, we're a heck of a lot closer to 7 than we are 5.
Which is why I say, like, if you ask me to, like, price out, like, and when I say, like, for an extended period of time, by the end of 2028, so 2.5 years, we got 30 months here, our rate's going to spend at least half of that time with one of those digits, as the first number. I would say there's probably, like, a 70% chance. I mean, I would say, like, if you want the distribution of, like, the most frequent number that you see in the first digit, 70% chance it's a 6, 20% chance it's a 7, 10% chance it's a 5.
I'm there. Yeah.
Like, that's kind of where I land right now. The most likely outcome is rates stay somewhere in the 6s on mortgages.
Yeah, I think I land there as well, because to your point, you either get the recession to get you down to the 5s, or that stability on inflation would really have to mean that there is not an ongoing concern in Iran. Like that would be a starting point for me, I think, unless you get a full-on recession.
Even that. Remember, like even before Iran, like you still weren't down to 2% inflation,
which is why it's so tough for me to get there without a recession.
Yeah. So,
which I do wonder what that spells for the housing market. More and more, I'm getting the sense that homeowners are adapting to and becoming used to these higher rates. I was speaking with Paul Lane the other day, and his sister's in the housing market, and they already have a mortgage.
Quote me on that.
There you go. In the 5s or 6s, and they had a starter home. They're looking for potentially another move, and so every year that goes by here, this becomes a little bit easier. But what I think was detrimental to this spring's housing market is you were at 6 in February and nearly 7 by April.
The big thing in terms of the thing that will make this easier, the FHFA tracks the average interest rate outstanding on mortgages.
Sure.
And it's ticking up by about 0.2% every 6 to 9 months. Like somewhere in that ballpark is kind of what we're seeing. Which means that, again, like it's a process to get there. But right now it sits at like 4.4%. By the end of this year, it'll probably be somewhere in like that 4.6, 4.7% range. And so the big thing that I see is, look, as that average interest rate moves up, it's indicative of a housing market that doesn't have as many people that are mortgage locked, and you can see more transactions turning over, and pricing is not as much of an issue. It's taking time to get there. But also these higher turnover markets, remember, that's the average interest rate nationally. These higher turnover markets like Florida and Texas and Georgia, those markets, you're already seeing higher interest rates on average that are in play for people that own their homes. And this is why you're starting to get signs from the big home builders that things are going to be normalizing from a construction perspective in a lot of those areas. So I think that 27 and 28 are years where nationally the housing data is probably going to start to improve. And this is another reason why when you look at the economic data, it's kind of hard to get to recession in the next couple of years.
Right.
You got data centers powering things through for at least the next 6 to 9 months. Like that construction's already started. It's not going anywhere. And if it does start to slow down sometime in 27 or 28, I think there's a housing impulse that's ready to pick up the mantle at that point finally, after like 5 to 6 years of just
mushy nothingness.
Yeah, mushy nothingness in the housing market.
Oh, glad you liked that.
I did.
Yeah, I can see the case, but I think there's always that risk of a crash that results in job loss. And I'm with you. It is tough to paint that picture.
You got to find what the proximate cause is,
right.
though. Like it's
with the amount of spending that's being committed right now. And especially the way the spending's being done, right? 3 years ago, it was all kind of pie in the sky stuff. Now it's, no, actually, we are physically building stuff. Facebook is trying to train people into the new workspaces that they're going to need over the next few years. Like, it is becoming realer.
More real?
Realer than it was 2-3 years ago.
Is it the realist?
Yeah. It's up there.
I want to do one quick item here just on SpaceX. Mike, do you remember a couple weeks ago after SpaceX's IPO and then it fell 50% and you were getting the articles like,
watch out for the lockups.
Watch out, this is like dangerous, blah, blah, blah. And I made the point in concert with data from Brent Donnelly, hey, after the lockups actually expire, you tend to see a little bit of a bounce. Oh, gee, looky-loo right here. You've got SpaceX having gone from 104 now up to north of $140 a share in the last week and a half or so. And so this is why you don't judge an IPO by what it's done in the last week, because a week ago everyone was like, oh, this IPO is awful. Why would anyone like buy this? Now people are like, ooh, it's up 40% in a week. This is kind of fun. Like, guys, they're IPOs. They are highly volatile. You're not going to be able to tell whether it's a success or failure based on how it trades for a week. Give it some time to breathe. Give it some time to rest. We all just need a little time, man. Even Elon. Let's take a quick break. When we come back, we're talking about Taylor Farms and why it just seems like there's another outbreak coming from their produce every week right now. Next.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show.
You know, sometimes we read pieces and we're kind of critical of them or the writing in them. This is not one of those cases. I quote from Kevin Draper in the New York Times. "It has not been a good summer for eaters of fresh food. Just as Americans are starting to come to grips with the cyclosporiasis wave and iceberg lettuce recall, jalapenos from Mexico were reported as suspected of being contaminated by salmonella.
Not a great few months for Taylor Farms.
Both contaminations involve Taylor Farms, one of the country's largest fresh produce companies, and both are linked to farms in Mexico. So this jalapeno situation was actually developing last week as I was ordering my burrito. And Ben mentioned it to me, and I said, you know what?
I also like to live dangerously.
I'm going to give it a chance and see what happens here. And I was fine. But, here's the thing. I often say there's no upside with lettuce. It's my version of you don't make friends with salad. Like, lettuce, the best case that you get with it is that it exists and goes down and it's fine. Like,
doesn't bring anything to the table is your point.
No, like, occasionally, like, look, I do enjoy a nice crisp leaf from Little Leaf Farms lettuce that I think is a really high quality.
Yeah.
But in general,
like
in particular, like romaine, which is like 9 out of 10 times, romaine is where the outbreak comes from. Romaine is just floppy. It's tasteless. Like, what are you even doing messing with that to begin with?
This was iceberg, but yeah.
Iceberg at least has a crunch. Like, you can see like some value in that. Put it in a nice wedge. It's lovely. I don't know. Lettuce in general, I'm just not excited about.
Yeah.
And could do without it most of the time.
Jalapenos, on the other hand,
love them.
huge fan.
Love them. So
Candied pickled ones,
I think the question to be asking on this is, look, is there anything that has changed in terms of... There's two questions. Number one, are we actually seeing an elevated rate of recalls, or is this just, for some reason, these have captured the nation's imagination? And number two, if there is an elevated rate of recalls related to, diseases making their way through produce, hey, what could be causing it, and what can we do to stop it? I don't have the answers on that, but those are the questions we need to be asking.
Yeah.
One day you're living in your own home, the next you can't return home after rehab. Now you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major financial decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now at 866-848-5699 and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Piece here from Bloomberg. Faulty backup cameras are plaguing tens of millions of U.S. cars. So back in 2008, at the tail end of the second Bush administration, there was a law passed that required that effectively directed regulators to help prevent pedestrian deaths in cars. And one of the things that ended up being required coming out of that was backup cameras mandated on all vehicles as of, I think, 8 years ago.
Oh, I didn't know that. Okay.
So they're all required at this point. But basically what you have here is that automakers have recalled about 21 million vehicles for faulty backup cameras in the past 8 years since they became mandated, including 6 million just in the last year. So a couple things on this. Number one, when we talk about, any kind of video technology, it's obviously adding complexity to a car. And when you have to build it at scale, the possibility that not possibility, but just the sheer math is, hey, if you include it in every vehicle going forward, there are going to be more vehicles that end up being recalled in terms of the total numbers. So I don't put much stock into the fact that more were recalled last year than like earlier in the period, because more cars have them now.
Yeah.
Like that just makes sense.
Mm-hmm. What amazes me is how quickly technology makes its just suck at basic skills.
Well, and this is the part that I was going to get at, which is I haven't taken driver's ed in a long time.
Sure.
About 25 years now. But the thing that I learned in driver's ed, I took 3 things from driver's ed that stuck with me to this day. One of them is always look the direction that you're driving. So, when I'm backing up, I'm not looking at the backup camera. I glance at it to begin with to make sure there isn't a little kid right behind the car, because that's the real purpose of it, is to detect stuff below the trunk height where you can't see with your eyeballs. But otherwise, no, I turn and look where I'm backing up, because you should always be looking in the direction that you're going.
I'll be honest, so guilty of this, I don't.
You don't?
No, I will frequently,
I just use
in
the
a parking
camera,
spot, back up, look in the camera, occasionally glance around and make sure I'm not seeing a car. But even now, my newest car has, motion sensors of cars coming in other directions that the camera's not picking up.
Sure.
And
right, I get the beeping and everything still, but
I'm lazy and I don't do it.
No, you always look in the
You should.
direction that
Yes.
the car's going.
Yeah, absolutely.
Likewise. Whenever you're moving anywhere, you should be looking in that direction. I tell this to my kids a lot.
Some of the funniest things I've ever seen are when people don't look in the direction they're walking.
No, my kids, again, they're 5 and 2.
Yeah.
And 90% of the time that they get into trouble, it's because it's they're looking one way, they bump into a wall, or they're looking one way and they slip on a toy they didn't see.
Trust me, my daughter had a mean meeting with a mailbox a few years ago on her bicycle that resulted in an ER visit. So, good advice.
Always look in the direction that you're moving, whether in a vehicle or out of one. That's what you should be doing. I'm stationary right now, so I spin my head like a radar platform.
Like an owl.
Or the Exorcist girl.
One of those 3 things.
Yeah. Let's take a quick break. When we come back, we got hour 2.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years, when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years, when convenience starts to matter more, and eventually the no-go years, when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here. We've got a nice little rally taking place in a couple of indices. The Dow is just chilling today. It's up 36 points, hanging out. S&P's up 50 points, about 0.2%. NASDAQ Composite up 223, a little more than 0.75%. Interest rates falling today as well. 10-year Treasury down 6.5 basis points, back down to 4.627%. This on the back of a cooler than anticipated producer price index reading that we got at 8:30 this morning. Dollar index coming in with that as well, down 0.17% to 99.73. Gold falling just a touch after a big run in the last couple weeks, down 25.40 an ounce at 44.42, so still about a 10% run for gold in the last week or two. And we got crude oil down $2.11 a barrel on West Texas Intermediate to 81.16. AAA national average for gas prices, though, pushing up another 3.5 cents overnight. This because it's factoring in that, hey, oil still rose over the past week. And so you've got AAA national average for gas at 407. Diesel, which is where the problem really is right now. Distillate inventories remain low worldwide. Diesel up 5 cents a gallon to 5.40 and 4/10. All-time high on diesel is 5.81. So we are back within 10% of that all-time high that was originally hit back on June 19th of 2022.
Yeah, and remember, we are nearing the end of really heavy electricity usage season across much of the globe, heading into the fall, where usage does come down a little bit.
Electricity or gas?
Both come down a little bit this time of year before kicking back in around that November time frame. And so that's the area to be concerned about, right? If we have an especially mild winter this year globally, then it helps things out quite a bit. But on the other hand, if you have a cold winter or just more of these supply constraints, then you could have some pretty serious price fluctuations, especially once those inventories start running dry.
And I don't know if you've been following, but I have. But we've got this super El Nino that's been building.
Yeah.
And if you want to know what typically happens with the super El Nino, if you're listening to us from the southern United States,
I am El Nino.
Yes, you get Chris Farley coming to hang out. No, what you get is you typically get like wetter, stormier winters in the southern part of the U.S. The northern U.S. and into Canada tends to be warmer and drier on average. South America, the western part gets dumped on by all the excess moisture coming out of the Pacific. The eastern part, like Brazil, tends to be droughtier. which is the technical term, I believe.
Yes.
If you go over to Asia, again, the place that you really want to focus on is what happens in Europe. And Europe, by and large, doesn't have as much impact from a super El Nino simply because, like, just think about it geographically. Europe doesn't come close to touching the Pacific in any way, shape, or form. But in Asia, what you end up with tends to be a little bit drier there as well throughout kind of, Philippines, Indonesia, Malaysia, India tends to be the case there. So we'll see what we get now that we've El Nino'd for the day. Peace and Barons. The hidden red flag in Wall Street's price targets. Okay, I'm intrigued. What's the hidden red flag in Wall Street's price targets?
That the averages aren't indicating what the underlying data tells you, and nobody looks at anything other than the averages, I suppose. But I guess I have.
What does that mean?
All right, so you have a big company. There's a bunch of analysts all across Wall Street who set a price target for those companies.
Okay.
They are paid to do so, and some people pay attention to those targets. What the author's pointing out right now is that there's been a pretty wide divergence of where people think those price targets should be on major companies like NVIDIA. And so while you might get an average that is about 43% above the recent pricing on a company like NVIDIA, the divergence is huge and growing compared to just a few years ago. I guess my question is, does this indicate any degree of a red flag? Is there any data that would support that, hey, when price targets diverge substantially, there is more volatility, for example, in markets? I don't know of any. And then third, does the average investor pay any attention to price targets? I guess would be my third question.
So here's my read on this. Basically, this is talking about how analysts have wildly divergent price targets. There are three ways that this can resolve. Number one, the analysts that set the low price targets are right. That would be bad, or at least worse. Number two, the average price target could turn out to be right because no one really has any idea, and when you throw it all into the blender, okay, it comes out as the average, and that's fine. Outcome number three, the ones who are the most optimistic could be right. That would be great. Do I know, which one of those paths we're going to follow? No, I really don't. It's not something that I think... Look, if the analysts that are actually following these stocks and are paid to follow them don't agree on where it's going to be, you think I'm going to have any idea which path it's going to follow?
Right, which is why I go back to, it'd be nice if that... I mean, there was some research done.
They never agree to begin with.
Right, but a 2024 study by some researchers at Yale and IU found that consensus price targets become less reliable when analysts strongly disagree.
Well, yeah, that's the nature of... That's circular logic. You don't need a study to do that.
So I think the point in that we are in right now, I suppose would indicate to you that if you are using a price target or an average price target as part of your investment strategy for buying or selling a stock,
sure,
or investing as an ordinary American, and these things get reported everywhere, including Bloomberg and CNBC and Morningstar and all sorts of different data tools that you can use, beware, because right now they are diverging pretty substantially, especially even with some of the most followed companies in the world, like the top 10 companies in the S&P 500, for example. But I don't know that leads me to believe that there's going to be more volatility in stock prices than there otherwise would be, although I've kind of got my hackles up to that given what we saw from major tech companies and their earnings reports over the last 3 weeks.
Yeah, I don't... This is not... Just like the divergence in price targets is not tradable information. I don't think there's anything in here that's useful that you can do with it either. It's not like this is panic or buy or do
No, but then again, Chuck, I don't think you or I pay particularly close attention to individual company price targets.
I mean, here's the thing, and this is a quote from there's an old hedge fund manager that I follow by the name of Ben Hunt, and he'll tell you, look, sell side, price targets are useless in a good market, and they'll absolutely kill you in a bear market. Like, that's basically how I feel. Like, sell-side analysts are here to do one thing. They're to get you to buy the stock.
Yeah.
And so in a good market, you don't need them because the market's good. In a bad one, they're going to kill you because they'll keep telling you to buy the stock. Like, it's just kind of what it is. Let's take a quick break. When we come back, let's talk a little bit about Anthropic and the latest on their potential IPO.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699, or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
It is just a week away, so if you're listening now, don't miss out. Thursday, August 20th at the Renaissance Framingham Hotel. That's the big castle-looking one right off of the Mass Pike, if you are familiar. We are hosting a seminar from the Armstrong Advisory Group all about Social Security and Medicare. We chose these two topics because they're easily the most commonly asked questions we get when it comes to folks looking at retirement down the road. How does it work if you are divorced, if you are a widow? How do your benefits work if there's a big age gap between the two of you on spousal benefits for Social Security? Maybe you've got a pension. Maybe you only paid into Social Security for part of your career. All of these are complicated questions that you need the answer to if you're going to properly assess your retirement. If you would like to register for the event, because registration is required ahead of time and space is limited, you can go to armstrongadvisory.com/events to register for free. You can also call us at 800-393-4001. But as I mentioned, Thursday, August 20th, 5 p.m. in Framingham at the Renaissance Framingham Hotel, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Anthropic investors bet on a $2 trillion valuation in record IPO. So, Anthropic still trying to move forward with an October IPO. And apparently targeting a $2 trillion valuation, which would be more than double what they were talking about a month ago.
I was going to say, it felt like weeks ago that they were talking about this, and I am correct that it was $1 trillion a few weeks ago, and now they are talking about $2, which really makes me wonder just what OpenAI might be leaving on the table here by delaying theirs even further, because I don't know that Anthropic, would be able to pull this $2 trillion valuation if OpenAI was appearing right next to them. I don't know if they'll be able to do it in the first place, but yeah, when you have two companies that are almost exact replicas of each other in terms of their design and function, I know from other practical standpoints they are not, but sure, for all intents and purposes, these are two model design companies that are trying to do the exact same thing. And OpenAI did not feel that they were in the position to be able to go public. Anthropic apparently still does, and they may reap the benefit.
I want to talk about this piece from Bloomberg. This one is just honestly messed up. Gen Z is moving money from stocks to sports betting in wealth plans.
This is exactly what I've been concerned about when it comes to sports betting. I am not shocked, and go ahead.
More than a quarter of Gen Z investors say they see sports betting as part of their long-term financial strategy. Okay, hard stop. When I was 22, I went down to Foxwoods in Connecticut for the first time. And I got to the point where I had to use a credit card cash advance to take out an extra $100 because I'd run out of money. And basically, if that cash advance had gone badly, I wouldn't have been able to pay my rent. It was not good. Now, I then went on just a wicked heater for like 2 hours and made a good chunk of money that night. And on the way home the next day, I had all the thoughts of like, well, if I do this every weekend for the rest of, the year, gosh, I wouldn't even need a job. I could just
be a professional gambler. Yeah.
And sure enough, I went back the next weekend and lost a bunch of money and was quickly reminded, Chuck, don't be an idiot. The
house
there's 2% of people that can actually do this, and most people can't, and the house always wins. So here's the thing. Mike, would you agree? A lot of people, when they talk about the stock market, they like to say that the market is rigged.
Yeah, I would agree with that statement.
Do you agree?
I don't agree that it is. I would agree that a lot of people say it.
I would agree that the stock market is rigged.
Would you?
Yes.
Okay.
It's rigged in favor of capital. Okay.
Okay.
Capital has...
That is not what most people mean when they say it's
No,
rigged.
most people mean that it's like rigged against them.
Yeah.
What I mean is that if you look at how a lot of the financial laws are crafted in the country, they're crafted to the benefit of capital. All of the stuff about, like additional investment tax breaks and this and that, capital gains taxes at preferable rates and things like that. Capital is incented to produce better returns than labor.
Yes.
My view then is, look, if capital is the house, don't you want to play on the side of the house?
Yep.
And the way that you do that is typically by investing in companies, hence, like you invest on the side of capital. When you are betting on sports, you are playing against the house. And it is very much something where if you look at the math, sports betting on a net basis loses investors money because the house takes its cut, and it is a zero-sum game. Like that's how it works by its very nature.
I'm going to ask you to not describe them as investors because I think that's part of the problem. But
Did I say that?
Yeah.
Gamblers.
Yeah.
Okay, and look, don't get me... I've gone to casinos. Yep. I've made sports bets in casinos. I've played blackjack, craps, roulette, poker. Like, you name it, I've gambled. And I don't have a problem with gambling. I do have a problem with looking at gambling as something that could be the source of any type of long-term edge, absent games such as poker, where you can statistically actually prove out that you have a certain edge over other players and make a career out of it.
So this has been my concern for the last several years now, which has been that many companies have seen a big surge in users and revenue by commingling and mixing together, I know I'm using the same words over and over again, investing and gambling. And I do not blame the 25-year-olds who are falling victim to this because I think they are falling victim to it. But I think it is becoming more difficult to differentiate between what is an investment and what is a gambling product. And even this goes beyond sports betting. I think this is critically bad, but we've talked about single-day expiration options, for example. You're going to have a tough time convincing me that you are investing in that case. Legally, you might be investing, but practically speaking, you are gambling. And we have all of these different new financialized products that disguise themselves as investing. In fact, there are a few brokerage trading platforms that are working on getting futures contracts on things like sports betting into their portfolios. I think some of them might already be there.
And a big part of the problem is people don't understand what's called variance. And here's the deal with variance. If you have a coin that you flip, okay, statistically, it's going to land heads 50% of the time, and it's going to land tails 50% of the time.
Sure.
Mike, what are the odds if you flip that coin once a day for a whole year of trading days, 252 days, each day you give it a flip? What are the odds that you'll have a 5-day streak where it's all heads or all tails?
Pretty decent.
99%.
Yeah.
Because of variance. It happens sometimes. What are the odds that you have a 6-day streak?
95.
87%.
Okay.
What are the odds that you have a 12-day streak? 12 days in a row where you get it right. Like the same thing.
22.
3% chance.
Okay.
Okay. So this guy in here, Robert.
Let's call him Robert.
Robert.
Like no one cares, yeah. It's Robert.
Well, no, they
Bobby
gave his
boy,
name.
Yeah.
Robert says that he made $2,500 on bets this year, betting $100 at a time. And he probably thinks he's good at betting. But Robert's not good at betting. Robert just has luck that has masqueraded as good, skill. If he can actually do that over and over repeatedly, then you can say it's skill. But to be able to look at, I've made these $100 bets and I'm up like $2,500 for the year, I know that the sample size isn't big enough to be able to prove anything there, and he thinks it is because he's misinterpreting variance as skill. We'll talk more about this in a minute. Quick break. Wall Street Watch is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled Navigating Retirement Housing Choices. Mike, when we look at the considerations for people in their housing and retirement, one that comes up are these continuing care retirement communities, CCRCs, or age-in-place communities as they're known. How does someone make a decision about looking at one of those?
Well, I think obviously you have to sort out your priorities, but the first thing is to think long-term about this. And what people sometimes overlook with these places is that term continuing care means that they adapt to your needs over time, but they do not just allow anyone in. In a lot of cases, they will have cognitive and physical tests that you need to pass in order to be accepted into these communities that then will provide all sorts of care later in life. And so I think early on is always better if you're considering that sort of thing.
The financial aspect of these also has a number of considerations as well in terms of what's actually affordable given your particular budget and liquidity.
Do I need a buy-in? Am I going to rent a place? What are my options for later in life? And then all sorts of tax considerations. Hey, I really want an income tax-free state. Well, is that worth it if I'm going to be paying more in property taxes given the composition of my assets and income? All of these really important considerations.
The guide this month is titled Navigating Retirement Housing Choices, and you've got a couple different ways to request it. First, you can call 800-393-4001. The second choice, you can go to armstrongadvisory.com and request it there. Again, that website is armstrongadvisory.com, or you can get it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. powerful Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets now mixed and off their intraday highs, following more inflation data this morning where the producer price index was unchanged in July, better than estimates of a 0.2% increase in wholesale prices. Right now, the Dow is down over 0.1% or 83 points lower. S&P 500 up 0.4% or 33 points higher. NASDAQ up 0.6% or 158 points higher. Russell 2000 is up 0.3%. 10-year Treasury yield down 4 basis points at 4.64%. And oil down 1%, trading at $82 a barrel. Cisco reported a jump in net income in the previous quarter as the tech firm continued to receive billions in orders from AI hyperscalers. However, investors were disappointed by its AI sales guidance, sending shares down by 8%. Meanwhile, in its second earnings report since its IPO, shares in Cerebras Systems are now down by 13% after the chip designer and cloud computing provider projected slower growth than some investors anticipated. Elsewhere, StubHub now down by 15% after the company failed to turn a profit in the second quarter due to climbing costs, despite surging revenue from the World Cup. And after today's closing bell, chip giant Applied Materials will report its second quarter results. I'm Tucker Silva, and that is Wall Street Watch.
I want to talk a little bit more just about this idea of variance and thinking that you're good at sports betting when you're not. Mike, you're not a basketball player.
No.
Would you say that you're a hockey player? Or at least, you're...
Yeah, I could...
Let's
guess
be honest,
I would go that
Mike,
far.
you would probably...
If I'm going to identify as any sports player, it would have to be hockey.
You would probably roast like 97% of Americans in hockey.
Yeah, maybe. Okay, sure.
Let's be honest here. So, you would then get toasted by the other 3%.
Correct.
Yes. So here's the deal. Have you ever had a game where you've scored more than one goal?
Yeah.
And how many shots does it take you to score that more than one goal? Like, you might have 2 goals on, 4 or 5 shots?
Yeah, around a 50-50.
And you have that game, and, if someone watched just that game, they'd be like, Mike is the best hockey player of all time.
Probably not, but yeah, sure.
You would then have other games where you might still get a ton of shots. You might end up getting 6-7 shots on net.
No goals.
But no goals, no assists. You don't factor in scoring at all.
Trip over the blue line, yeah.
Mike is the worst hockey player of all time.
Yes.
The truth is you're somewhere in between. But variance on your shooting percentage makes you look great one game and not great the other. Likewise, if anyone here is a baseball fan, if you ever see someone get 4 hits in a game, you're like, oh, that guy's great, but no one's ever hit 800 for a Major League Baseball season. No one has ever, despite, you go and watch NBA players in warm-ups, and they'll make 10 straight three-pointers, but no one shoots 1,000% from three-point because it's just not possible. It's the same thing with sports betting. You can go on a hot streak. It's not because of any skill that you have. By the way, this is the same with trading stocks. You can go on a hot streak with stocks. Again, variance plays into this too. If you are a 50%, hit rate on trading stocks and whether it works for you, you can have the same numbers that I laid out before. If you're a 60%, if you have a 60% hit rate, okay, you can end up then you do have almost a 20% chance of having 12 straight trades that go in your direction. Not because you're a genius, but just because of the variance in it. And so this is the stuff that you need to think about when you're separating investing from gambling from trading. And the fact that Gen Zers are saying, oh, I'm going to make sports betting part of my long-term financial plan, I'm sorry, but that's variance, not skill.
Yeah, and again, from the capital market structure standpoint, what concerns me about this is, again, it's becoming cloudier, the difference between investing and gambling.
When you could do it all in one account, it's not good.
It's not good. And the problem with that is that if then the variance results in that same person losing a whole boatload of money, because they are confused about the difference between investing and gambling, they might lose confidence in both and therefore lose confidence in capital markets. And that is bad for our system because those capital markets pretty much fund your retirement if you're listening right now. So, I see a big problem with this. And I just personally believe that futures contracts on the stuff that we're seeing right now have absolutely no business being in an investment account next to a position in a stock.
The other thing I said earlier, look, I do think if you want to use the word rigged, like markets are rigged in favor of capital. Like they are. The way that most people use markets are rigged in that terminology is like, oh, like I lost this trade because like the big boys are, able to
squeezing me. Yeah.
And to that I say, look, that's not rigged either. Like let's start with an assumption. Let's say the big boys are squeezing you. Okay? Mike, again, you're a hockey guy. If you played one-on-one with Wayne Gretzky and he roasted you over and over and over,
which would still happen even today as he's
right, even when he's 70 years old, he still would he would absolutely take you to school.
Yes.
You wouldn't walk off the ice and say that game's rigged. You'd say, no, that he has invested more time, money, and effort in it than I am and has a natural level of skill higher than me, and he beat me.
Wayne's only 65, by the way.
Sure. Yeah, he'd definitely beat you then.
Yeah.
Definitely at 65. Likewise, if you are trading stocks, you are going up against people who have committed billions of dollars of capital and spent millions of dollars building out trading strategies and this and that and everything. They should beat you most of the time.
And by the way, sometimes they are lawmakers who have inside information, and that should be banned.
Right,
and
that
part
should not
is
be
rigged.
legal. Yes, like that stuff should not be legal. But like, if you got into a basketball like game of horse with LeBron James, you don't walk out being like, well, like that game was you played LeBron James. Like when you're investing in the same markets as Warren Buffett and Stanley Druckenmiller and all of the legends of investing who still trade today and stuff, you don't get to walk away from that and be like, well, it's rigged. Like, no, they're just better than you. And I'm not saying this like you, like they're better than me too. Like this is how it is. Like,
so don't play the game.
Right. If no one makes you play basketball against LeBron James. Like you can choose which. You don't have to dance every dance. Is the point I come back to. Let's see. Let's take a quick break, and when we come back, we'll do a little bit of stack roulette.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange.
This is Mike Armstrong from the Armstrong Advisory Group. Our new guide, Navigating Retirement Housing Choices, can help you understand how your housing needs may change throughout retirement so you can plan ahead on your terms. Get your free copy by calling 800-393-4001 or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Who wants to play golf to support the Disabled American Veterans Department of Massachusetts? I know you do.
Let's do it for the DAV.
Mark your calendars. Monday, August 31st, Granite Links, Quincy, Massachusetts. A full day of golf and entertainment, and all to raise money for the Disabled American Veterans Department of Massachusetts. Let's go. DAVMA.org/event.
Let's do it for
DAVMA.org/event.
A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women.
Taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Subscribe now to our YouTube page where you'll find interviews, show highlights, and complete shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button.
Mike, I want to start off with this piece from Wall Street Journal. Do investors deserve to know the details of a CEO's medical leave? So Home Depot disclosed yesterday that Ted Decker, who is the chair, president, and CEO of the company, will take a temporary medical leave of absence. This is not uncommon. We see this with CEOs pretty regularly.
Yeah, in fact, CEOs are really old, so it happens pretty often.
It does. The company did not, however, give the reason for the medical leave, which is out of character for other similar announcements. And so it raises the question mentioned in the title, do investors deserve to know the details of a CEO's medical leave? And I've gone back and forth on this even in the last 5 minutes, like thinking about it, because
deserve is an interesting word.
Right? It really should be, do investors need to know the details of a CEO's medical leave? And I think where I end up landing is on no. The reason being, as long as you are saying this person is not going to be acting in these roles for this period of time, then I don't think investors don't need to know the reason. If it becomes apparent that that length of time is going to change, then the company needs to disclose it to investors as soon as possible, immediately after.
So here's the good news on this. My opinion's no as well. I think the CEO is entitled to his privacy, and whatever he has going on, he doesn't need to tell anybody. But if you disagree, then sell your shares.
Right. If
Like,
you're not
that's how markets
comfortable with
work.
that, then you don't have to own the company.
Like, there you go. And the CEO here made a decision that he didn't need to share it. I would imagine, given that he decided not to share it, he has a lot of confidence in his management team that they're going to be able to run the company in his absence with zero disruption. But if you feel that you only bought the shares because of the the tenure and management of the CEO, then by all means, sell the shares. I would also be willing to say personally that I think I would be hesitant to invest in a company that I'm only investing in because of the CEO. I think that's the sign of a poorly run company.
Sure. And, there's the counter to this is there's a, who's the person quoted in here? Charles Elson, who is the founding director of the Weinberg Center for Corporate Governance at the University of Delaware. So Elson makes the point, people are investing in you, depending on you, relying on your leadership, and if your leadership is going to be compromised in some way, you need to explain it.
Sure.
I understand that view to a certain extent, but ultimately investors just need to know, are you going to be acting in those roles or not?
So I would differentiate between a few things. One, no one is forcing anyone to own Home Depot stock.
Nope.
No one's forcing you to work at Home Depot, anything like that.
Sure.
I feel differently, for instance, about an elected official. You're going to represent my needs in Congress or in town meeting or any of those things, and you need a leave of absence. I'd like to know why, and I'd like to know how long it's going to be because it affects my representation in government. And so
sure,
I'm kind of going off the cuff on this one, but I feel very differently if my elected official is going to go on a medical leave of absence for 3 months. I want to know why. I want to know details.
Because you don't have a choice.
Yeah. Correct. I can't easily say, okay, well, my elected official isn't appearing in Senate and voting, and so therefore I'm going to sell my home, relocate my family to another area because I want an elected official who's there.
Right.
It's a little different. So I don't think this is a universal thing.
Sure.
And I think that different roles of leadership require different thresholds. But for me, yeah, a private citizen who's acting in a certain role for a company shouldn't need to explain what is going on in their personal lives.
Elson also mentions, look, if you leave, this open to, speculation, then the rumor mill takes over and people start speculating, and that's true. It does.
Yep.
But again, if the stock is moving because of the rumor mill about the CEO,
it's probably a bad sign for the management of the company.
Then the stock isn't dependent on the underlying business for its growth. It's dependent on the name of the CEO.
Yeah.
What else we got?
No, I don't know enough about this story, so I'm going to turn to club sports teams.
Oh.
I was going to talk about Americans' love for their V8 engines and how loud they are, but honestly, I've never owned a car with a V8 engine, and I don't really intend to, so I don't know anything about it.
Sure.
Parents are crying foul over pricey club sports teams, which if you do not have kids in club sports, you might not be terribly familiar with, but I do. They do not play on club sports teams. They happen to do all of their stuff primarily through the town, except for gymnastics, which doesn't have a youth town league, so it's done through a private club. And the prices do seem the prices for town travel hockey seem ludicrous. To join a club seems even more so. And I fall into the same exact category here, which is if you think this is ridiculous, then don't pay to do it.
Yes, but I think the problem that is noted in here is that in a lot of areas, once you get past a certain age, there aren't options that are cheaper for kids who just want to play sports but not compete at that high of a level or at that intensity or at that price.
Yeah. Some of the problems that I do see with this, so I was speaking with a family member of mine in Colorado whose son plays ice hockey, and the options there are very much clubs only.
Sure.
And the system there is you sign up, you commit to that club, you pay the fees up front with no reimbursement,
yep,
and then you go try out to figure out what team you've made because they have levels for all players.
Sure.
That is problematic to me, and I would avoid it. Like, here in the systems around here and a lot of the club sports generally, you can try out for multiple teams, figure out if you are making that top elite team where they are genuinely trying to develop you into a very strong sports player in that specific sport. And again, even there, a tiny fraction of them will even ever play in college. But that's clearly the objective of these kids who are putting a massive portion of their lives into it. And then to say, hey, we need your money up front, and then we'll let you know which team you're playing on, that would bother me quite a bit.
Yeah, when you look at... So here's the interesting thing about club sports is they're not exactly profit centers. And what I mean by that is, like, the costs are high, but you have to also understand where the money goes. The single biggest place that it goes to is acquiring time, like field, rink, whatever time it might be. And part of the reason for that is that over the last 40 years, despite the population growing significantly, there's basically been no municipal construction of new facilities for that kind of recreation. The stuff that gets built, it's all private facilities. And so they do have, investors that demand a return on that investment. And so the prices go up because it's not, hey, the town built these fields for the use. No, those fields were built back in the 60s when the population was half as much as it is today. And now you got more kids competing for the same space. Okay, the private sector is trying to deal with that, but they need to at a higher cost.
The problem as I see it, there was a time when we were kids, Chuck, the club sports were kind of reserved for those elite players.
Yes.
And you paid to be part of that. And the good thing is that's not the case anymore. If you want to play club sports, there's a level for you at pretty much every level.
Sure.
The downside to that is
kind of cannibalize the rest of the ecosystem.
You end up paying a boatload of money, and it's not always terribly clear whether or not your kid is going to be making it to that next level, especially if you're not terribly familiar with the sport. Like, hey, we're a club. We've got every level for you. That's great. A lot of access. Also a lot more money that needs to go into it because of that.
Yeah. Taking a look at markets as we head towards the top of the hour, we've got still a bunch of green on the board, though the Dow has turned slightly negative. But the S&P and NASDAQ remain in positive territory. Bonds still catching a nice little bid today. And so, again, not a particularly eventful day in markets yet. Take a quick break here for the rest of the day. We're back at tomorrow to finish up the week. We'll see you then.